This amid a new report from UBS that finds the number of American customers intending to subscribe to Disney's new streaming service, which launches November 12th, is exceeding the company's original targets. With theme parks, streaming, a billion-dollar box office machine led by Marvel, a massive TV audience, does the competition, we're looking at you, Netflix, even come close? Joining us now is a man who knows, Tom Rogers, first president of NBC Cable, former CEO of TiVo, company with deep roots in streaming. He is also the chairman of 3 separate media and tech companies, including WinView, Captify, and Frankly, and also a CNBC contributor. Tom, it's great to have you on Worldwide Exchange. I know it's a long day for you. Thanks very much for joining us. Netflix stock down 20% the last couple of months. I think the Disney threat is spooking investors. Should it?
Well, I think Disney's a formidable company. The theme park opening is just one more example of how extensive their intellectual property is, how great their brands are, and what a great management team they have. Not only Bob Iger, but the man charged with transforming the company in terms of streaming, Kevin Mayer. Disney's got an awful lot to work with, but Netflix is damn formidable. It really is. And it missed its estimates last quarter, which has clearly wreaked some havoc with the stock. But they also doubled down and said they were confident that they were going to be hitting about 30 million new subscribers for the year, Netflix. Just to put that in perspective, it took HBO about 30 years to get 30 million subscribers, and Netflix is going to add an incremental 30, that's globally, in a year. So Netflix is really, really formidable, and I don't think Disney's prospects are really all about how much it can do vis-a-vis Netflix. It's about how much it's going to do relative to all the other players coming into the streaming world.
Yeah, is it overly simplistic to sort of pit everyone, Tom, against each other? Disney versus Netflix, Hulu versus this. How much room is there on the streaming screen for the consumer? Won't they have all of them or most of them?
Well, you're pointing to a huge issue here, which is we just hit the highest cord-cutting quarter in the history of cable and satellite. It doesn't look like it's going to get better for traditional television bundles. And what people expected was, as that happened, subscribers would start going to these so-called skinny bundles that Hulu TV offers, YouTube TV offers, Sling offers, cheaper, smaller packages of channels. But those have clearly not done as well as people thought, even though they're much cheaper at $50 versus $80 to $100 for your cable satellite bundle. So we are seeing some price resistance set in here, and price resistance at levels that's bigger than what people thought. So there is going to be a limit as to how many streaming services people are going to take to. Netflix, with almost 60 million domestic streaming subs, I don't think they're going to be the ones that people are going to disconnect, because their original programming budget for television is just so high that they always have new, fresh material coming on board. I think the other players who are spending in the $1 billion to $2 billion or so in originals a year, that's where the competition's going to be for who's going to be the second, third, fourth kind of player. Disney making the decision to bundle Hulu, Disney Plus, and ESPN Plus at a very subscriber-friendly price of about $13 a month is going to have a huge advantage there, as well as with their brands, to really be that in that second position, I think. But look, movies that have run their course in the theaters are not necessarily the game changer for attracting people to streaming services. Netflix has had a lot of Disney films. You don't hear people talking about the Disney films on Netflix. You hear them talking about the originals. So it's going to be interesting to see if Disney can really leverage that film library, even though things have run their course in the theater, and make that really a basis for the streaming services taking off.
You think Disney can make money at $13 a month?
Well, they can make money, but what the investor world, I think, is largely missing is the amount of downdraft they have to deal with on the traditional channel business. When you look at ESPN at about $8 per sub that it gets from cable and satellite, and you put together the other services of Disney and the ones they acquired from Fox, and you're talking $17, $18 a month that they get from cable or satellite, the expectations are that the linear television channel world, our traditional TV channels, are going to lose some 20 million subs or so over the next 5 years. Well, to make up that $18 a month with $13 a month streaming bundles, you have to get to about 30 million new streaming bundled subs to just make up for what you've lost on the traditional TV side. Now, Disney's already been awarded with about a $40 billion market cap increase since it announced its streaming plans in April. And a lot of that is excitement on the growth of the streaming, but you got to take into account how much the traditional TV world is going to be disrupted and all that decline.
How do you think the consumer is going to react, Tom? There's a couple ways to look at it now. Let's just, like Hulu Live, for example. You can do 2 packages. You can do, I think it's $45 a month if you have no commercials, and then a little less or a little more if you want no commercials. How is the consumer going to react? Will they try to save $4, $3, $5 a month, but view commercials, or will they pay up a couple of bucks to get rid of them?
Well, there'll be a split on that. There's certainly, and a lot of TiVo's success was all about how do I skip through commercials. And so there's a huge audience out there that wants its television commercial free. And a lot of the Netflix experience, a lot of the Amazon Prime experience is give me all the entertainment I want on demand with no commercials there. But Hulu's had some real success having a lower price and putting ads into it. And Disney is actually claiming that delta between the no advertising price and the price you pay if you get ads, the value of that advertising they're putting in there makes up and more for that delta. So it does look like there are consumers who will be willing to pay a lower price and take the ads. I think they got to be very careful not to stuff the ads in there like with linear television. You've had a number of services that I think have chased people to Netflix and the non-commercial services because the commercial loads have gotten too high. So I think there are going to be limits as to just how much they can get from advertising revenue there. But certainly it's going to be an option popular with a number of consumers.
And of course, Comcast, our parent company, the NBC product, we have a streaming service that is coming out as well in the future. I wonder, though, Tom, you know, are these companies, and maybe I'm just jealous, are they overpaying for these producers? The $200 million deal with the guys that built Game of Thrones, are they throwing good money after bad in the hopes of having 1 or 2 hits?
Well, you know, when I was at NBC, and you always ask the question, why are there so many network TV failures? Why aren't there more successes out there? And the answer the entertainment people would often give is, well, there's just a dearth of good writers. You just can't get that much good television because there's a limit on the number of writers who can put together creative good television. Well, we've seen recently that that's just not the case. The new entrants have done an unbelievable job putting together some high-quality television. There have never been more high-quality choices on TV. And the best of the best as part of that are getting bid up because it's clear that original buzzy television, when it can cut through in an environment with all this choice, rewards services terrifically. And Netflix has a very low churn rate, say, compared to HBO or other pay services because of just how much ongoing great material is always there. Not that an HBO hasn't had great television like a Game of Thrones, but when it comes far and fewer between and people can disconnect, those churn rates catch you. And in the end of the day, it's all about how do you hold the consumer there over time, particularly with streaming services, which are so much easier to disconnect than traditional cable and satellite, which was such a hassle for consumers to do.
Yeah, there's a belief that Netflix suffered in April simply because Game of Thrones came back and people cut the cord, so to speak, on Netflix. It's a crazy world. Tom Rogers, though, we appreciate. No one lays it out better than you. Thanks for joining us on Worldwide Exchange. Tom, have a great day.
Brian, thanks for having me.
Thank
Great
you.
to see you.
All right, thank you. Great to have insight there. Dow futures up more than 200